everybody? It is Tuesday, July 28th. Yesterday I sent out the new edition of MMT Trader. So if you want to get that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. All right, let's talk about what's going on. Stocks pulled back today. Look, the fiscal supports, they're ending this week. All right, that $600 supplemental unemployment, that's over. That's done. And they're nowhere near, the Senate is nowhere near on coming through on a new bill. I mean, even the Republicans in the Senate, they are divided. And then when you look at the House and the Senate, they're nowhere close. Nowhere close. And even if they do a bill, they're talking about reducing that $600 a week down to $200 a week. I don't think that's going to be sufficient. I mean, you got a lot of businesses still closed. You know, I walk around here in New York City, I mean, every block. I mean, stuff is shuttered and it's not coming back. So this whole, discussion about, or this whole argument about, we're paying people not to work. No, people cannot go back to work. I'm sure everybody would go back to work who could go back to work. But they can't go back to work. A large part of the economy is still closed. I mean, we got stuff closed here all over the place, and we are entering phase 4 here in New York City, but a lot of stuff is just, it's gone, it's out. And people have lost their jobs permanently, and jobs are not plentiful right now. I mean, it's bad. So if they're cutting this down, so what's going to happen? You know, the core of my analysis are these fiscal flows. You're going to see these drop off. Yeah, we're running at record level of spending. Obviously, I've been talking about that. But these flows are going to slow down. We're already seeing, not already, but the employment and withholding tax flows, I've been talking about this. They are giving no indication whatsoever of an improvement in the labor market. And I told you, I predicted we were going to see weekly unemployment claims start to go back up. And yeah, last Thursday, guess what? Up 109,000. I kept telling you. The weekly declines were getting smaller and smaller and smaller, and the tax flows were saying, look, things are not improving. And boom, you saw an increase in weekly unemployment claims. Another thing I told you, I said gasoline demand was at the lowest level in 5 weeks. Distillate demand at the lowest level in 3 weeks. Jet fuel demand falling. Guess what? We saw a build in today's API oil inventories in gasoline stocks. That was unexpected. And that goofy blog, Zero Hedge, they actually said, maybe there's a problem with gasoline demand. Well, yeah, I told you this 2 weeks ago. All right? But the fiscal stuff is bad. I mean, when this ends, we're going to see a big slowdown in these flows, in these fiscal flows. And remember, I look at this stuff every single day, right off the daily treasury statement. What I tell you, people or media or other market observers or analysts, they're going to tell you 2-3 weeks from now, maybe a month from now. I see the flows in real time every single day. It's the core of what I do. It's everything. Those fiscal flows drive everything. You're talking about billions or tens of billions, in some cases hundreds of billions every single day, being pumped into the economy or taken out of the economy. And guess what? The deficit fell by $155 billion, and that was exactly the amount that personal savings went down, because the deficit of the government equals the surplus of the non-government. You reduce the government's deficit by $155 billion, by definition, by arithmetic, it means you reduce the non-government surplus by $155 billion. So that $155 billion decline in the deficit over the last 2 weeks, that's savings that's been taken away from the non-government. The non-government is me, you, it's everybody who's not the government. How's that good? How's that good? That's why when I hear people say, we got to reduce the deficit. The only way the government can reduce the deficit is by taking away our surplus, our savings. They got to tax it away. And it's exactly what happened when those tax payments hit on July 15th, took away $155 billion. Now those tax payments are still going on, but the fiscal flows, that's the stuff, the money the government's pumping in, that's going to slow down. Stock market is still near, very close to its all-time highs. There, if you look, by the way, if you look at the put-call ratio, which I do every single day, the 20-day average of the put-call ratio is now at the lowest level in 6 years. That is an extreme overbought condition, at least when looking at the put-call average. Again, I can look at the AAII weekly survey, and that shows the exact opposite. You know, that shows low levels of bullish sentiment, high levels of bearish sentiment. But that, you know, that dichotomy there between those two indicators, that's been around for a while. But there's a 6-year low in the 20-day average of the put-call ratio. Man, that's getting down there. So there it is. You got an economy that is almost guaranteed to slow down again as the fiscal support ends. We're nowhere near a new coronavirus stimulus bill in the Senate. Then the House and Senate would have to resolve their differences. I mean, I don't know. We may not see anything. Not to mention, I think the Senate goes on summer break in August coming up. I don't know exactly August when, and then what? They're not back until sometime in September. In the meantime, the economy could go right down the tank. All right? So, bearish on stocks. I think it's pulling back. By the way, gold now, look at it. 1950. And I still think there's a very strong case to be made for higher gold prices. I wrote about that in my report this week. So if you want to read about it, you got to go get that 30-day free trial. The link is right here in the description below. I just recorded a new podcast today, but it'll be out tomorrow. I'll let you know about it. All right, everybody. Stay safe. See you tomorrow. Bye-bye.